Right. Good morning. Good morning. Is it good morning? It's afternoon. Okay, it's afternoon. Afternoon, everyone. Afternoon, everyone. Can you all hear me? Can you all see my screen? Can you all hear me and see my screen? Loud and clear. Wonderful, 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 wonderful. Right. So we just want to look into today we have quite a number of fundamental news that we have on the charts. And if ever you have been following me for a while, you actually understand that I have always emphasized this point that fundamental news, it does not change market direction. All it does, it gives volatility to market direction or to the order flow or to whatever direction that the market will be wanting to check. Let's say the market wants to go up or wants to go down. When fundamental news is introduced, all it does is introduce volatility. Volatility is just that extra speed whereby something that was going to take 4 hours, let's say a zone was going to take maybe 4 good hours for it to be reached. When fundamental news, especially high impact news, is involved, what happens now is that same thing can actually be achieved in lesser time. So that's the whole idea behind fundamental news. So now, most of you now, one of the biggest problems that I've seen in the trading community, especially when it comes to this high impact news, is this idea that many people are pushing, which is a wrong idea or a false idea, which is actually, I feel like it's actually incorrect, or it's actually not right for people to literally push such an agenda like that. For example, the agenda that I've seen most people pushing is the agenda that high impact news, it makes you a lot of money. In as much as that point, it sounds correct, but it's not correct. If you understand what fundamental news is, even if it's high impact, whether it's CPI, it's PPI, it's NFP, it's interest rates, it's FOMC, whatever fundamental news event it is. So most of you realize that due to a lack of understanding, you fall trap to most of these statements that you see people talking about online, whatever, and you literally make some crazy wrong financial decisions on those days where those high impact fundamental news are happening, right? You make some. So there's this other one of the days I will tell you about something that is I think most people, they're actually stepped by this thing. I will do a series one of the days, I think this month, a series called financial illiteracy in the trading industry. The level of financial illiteracy that is currently happening right now in forex trading, it's too much. It's beyond. It's crazy. You can tell by the decisions that people are making that this is all coming from lack of the people. They are basically financially illiterate, because let's say for example, you fund $1,000 account at the beginning of the month. Then you find that at the end of the month, let's say you traded well, you know what you're doing, whatever. Then let's say you're on $10,000, for example. I'm just giving an example. Then now come to the first week or the first Friday of the new month with that $10,000, right? Because of this idea that people are pushing online, you risk that whole $10,000 on major fundamental news events. You grow your account from 1,000 to 10,000. Then you take that whole 10,000, you want to risk it all on major news events that are happening, of which these are just events that happen. It's not like they happen every day. They don't happen every day. NFP happens 12 times a year. Same thing with CPI, same thing with PPI, same thing with FOMC. So imagine now losing or risking your whole entire money on an event that occurs once a month. It's serious financial illiteracy. So I've seen people risking their whole monies on these major, of which these major news events now, they also now do also have like, for example, I've seen moments where even if the market eventually went up, but before they went up, you can see sometimes they can even drop a little before they go up. And there, someone would have risked everything. Everything. You know that that is your last money, that is your last trading capital. And you actually risk it all on one on an occasion that happens once a month. That's serious. It's serious. I don't like to call it stupidity, but it's actually stupidity. Financial stupidity, whereby how can you risk 100% of your capital, of which is the problem is not about it being 100% of capital. The problem is you actually know that this is your last money and you're risking it all. If ever, um, let's say you have a separate account, right? You know that this is my main account. Then you can. That's why I have always told even those that are in the class that you can have two accounts. A fundamental news account whereby that one, you know that here, even if I go all in and I lose that money, I don't care because I still have my main account. There is nothing wrong with that. Most of you now, you are taking your main account now, your final money, you are risking, you are going all in. And most of it is coming from imitation from what you see online. You see, you go to Instagram, you scroll, you see someone flipping 1,000 to 10,000, someone flipping 10,000 to 100,000 in that fundamental news event. And you're so excited, and your dopamine is kicking, and you want to do the same, but you're not aware of the background story behind the entire thing. Those people, they don't mention the whole entire story behind whatever that they're posting. They don't share with you. They don't even tell you that I have a separate account. That even if I blew this one, I was still gonna tomorrow I will still come and trade. But you now, you from social ngwe, you come here with your $100, you come here with $1,000, and you see that happening. You see whatever happens there on Instagram, whatever is happening there, and you want to do the same. Yet people, they are not giving you the full story. People, they are just giving you bits and pieces of the truth. They are not even giving you the full story. So most of you that's why you're losing it. You are losing it because of the things that you're just seeing online. You just go to Instagram, you scroll, you see certain things, and boom, you're already falling trap into the wave. Serious financial illiteracy is happening in the trading industry, which is beyond. That's why you see the number of millionaires and billionaires currently in trading. It's still little compared to the number of people that are trading. It's very little. Looking at how much potential is there for someone to become a millionaire or a billionaire through trading, the potential is too much. But now the people that are in the industry, they are too much financially illiterate. Too much guys. Forex trading has a lot of money, which is good. But it having a lot of money, it mustn't be an excuse for you to practice financial stupidity on the chart. That's why you can have different accounts if ever you really enjoy doing financial stupid decisions. Like, well, let's say you want to go full margin on a on a certain position or on a certain moment. It's not a crime. Hear me, it's not a crime to do that. If ever you know that you have different accounts, and if you know that that is not even your last money, and also if you also know that even if you blow that money tomorrow, you'll still come back and trade. Most of you are busy imitating things that you don't even know. You don't even know the whole story, and you're busy imitating. Be careful about that. So, going on to what we are looking at today, the most important thing when it comes to fundamental news is always to understand what your dollar index is basically doing. Once you understand what your dollar index is doing, most likely it will give us an idea of where the direction of CPI is doing. Because remember, CPI, it affects the US dollar. So, it affecting the US dollar, you just need to understand the dollar index mainly. Once you understand the dollar index mainly, even if you go to individual pairs that are connected to the dollar, whether direct or indirect, you now just go there, but having an understanding of where we are headed towards. So yeah, as I spoke last time that we are coming to take out this, right? Even here, if I'm going to mark our current range here, our current range is this one, right? Um, that's our current range here, of which you're expecting it to close above there like that. So if you go to the weekly now, going on to the weekly, okay. let me go to the weekly on the dollar index. I'm gonna go to the weekly. DXY weekly, right? DXY weekly like this, right? So on the weekly, this is just the range that we are focused on, right? So if you look at this range that we are focused on, you can just put it like this, right? So looking at things from this perspective, you can literally see that here, this is one full candle up, then this is all still a retracement since we haven't taken out its low like this, right? Which is okay. So now the most important thing is the details, the inside details that are currently happening there. So inside here, there's nothing really. All I can see on the weekly is that here, this new body it closed above the bodies of this previous, most likely. There is a bullish potential there. So now on the weekly, no much details there that we can talk about. No much details that we can add to that. Let's go to the daily. If you go to the daily now, on the daily, they literally showed some signs of definitely giving you uh some form of shifting of structure to the upside, right? Where is the confirmation? The confirmation here in this case, here they came down, went up, they also came down and took out this leg here. They broke structure down there after breaking structure down. So this was our level that broke that structure. And they also came and the body is there closed above this level, right? So that's the shift there on the daily. So that being our shift now, it doesn't mean that necessarily we just need to fly up there, right? Because remember, even if you're going to mark your current range in this case, your current range in this case is just here. This is all a buying range, right? So this being a buying range like this, what I'm talking about here, it's something that most of you may not understand. Uh, as I'm talking because it's a whole new idea that most of you are not even aware of, right? But I believe most of the guys that are in the class there, they're aware of what I'm talking about. So yeah, this is our buying range. That being our buying range now. So institutions now, when we're in a buying range like that, they also look at factors like, is there any liquidity available? If there's no liquidity, is they look at all those factors. If ever there's any liquidity, there's any major zone that they've left behind, they look at all those factors. If ever there's any major zone that they've left behind, most likely they prefer to actually come and take it out before they fly. So in this case, if they come back here, they're not even violating this bullish structure. Excuse. So even on FOMC today, I would try by all means if we get a chance in the evening. FOMC, it's actually at 8. It's at 8 p.m., right? 8 p.m. And also at half past. So by any chance, we're also most likely going to have another session in the evening around 7:50, if not 7:45 or 7:30. We're going to have another session also. So now, if this drops nicely into this level, it will just be pulling back into here so that it flies. I like the way it's dropping because so it means now if the DXY falls, right? If the DXY falls, which is basically if the dollar goes down, it means your anti-dollar pairs will go up. Anti-dollar, these are all pairs that are indirectly related to the dollar. Indirectly related to the dollar, we're talking about your GU, your EU, we're talking about your US30, your NASDAQ, we're talking about your gold. Those are indirectly related to the dollar. Then your USDJPY is directly related to the dollar. So if the dollar goes down, it also goes down. Your USD to also go down. So I'm just giving you a rough idea of basically how these things. So once it drops nicely here, if FOMC comes and we are here, definitely the FOMC will definitely most likely shoot up actually from there. So from the daily, that's all the information that we can extract. What I also like about this 8 hour, what happened on the 8 hour? What happened on the 8 hour is that um we actually have some form of reversal that happened there. Some form of reversal that literally happened there, which is a good thing, which is a good thing now because most likely it's actually giving us indications that indeed, most likely our what do you call this? our CPI, it will definitely most likely give us something like this. So once you have done this on the DXY, once you have done your entire analysis on the DXY, even if you go to your individual pairs or the pairs that you're going to focus on. Now, when it comes to pairs now, most of you now, you have a problem now of pair selection. When it comes to pair selection, remember what I told you in the beginning, that fundamental news, it gives volatility, right? So you discover that one of the pairs, let's say, for example, I have two pairs. Let's say I have two pairs. I have two pairs, right? Let's say I have two pairs. One pair, let's say it just wants to come here, then continue going down. Then another one, it literally wants to come here as well as also there. So these will be two different pairs that you'll be having, for example, even during this fundamental news event moment. So if I have two pairs like this, if I look at this range, the range that is the buying range that is here and the buying range that is here, this one is bigger than this one. So it means this one will just give me a small move. Then after that, most likely just give me rejections to the downside. But this one, it has a lot of potential to the upside. So most likely, it's wiser to invest your money in a pair like this, right? In a pair which you'll be seeing that the range of the going up is wider, and it's also giving you that chance and that opportunity to keep buying further and further and further on. Right. So those are things that most of you're not even aware. You just think that you just come to the chart, you do whatever you feel like doing, and you just trade whatever pair. No, all of the everything that you see happening on the chart is calculated. Everything that you see happening on the chart is calculated. You don't just do funny decisions there that you don't we don't buy because we feel like buying, we don't sell because we feel like selling, we don't hold because we feel like holding. It's not about feelings here. We are dealing with feelings. Forget about your feelings. If ever you still have if ever you still have if ever you still think that you are dealing with feelings, yeah, forex trading, we're not dealing with any feelings here. Throw away your feelings somewhere else, not here. So here we're not dealing with feelings. We're basically dealing with the intellectual side of things, whereby your brain, we are using your brain here. We're not using any funny feelings or whatever. Right. So having said that now, right now, what time is it now? 20 past to 1, right? So we're almost left with I can say close to 1 hour, 10 minutes. Here, this candle, it's left with 40 minutes to close. So another beautiful thing that it can do also for this candle is also to close below here. If it also closes below, that would be a good thing as well. That would be a good thing as well. It's a good confirmation as well. Besides that, let's see also 2 hour. Let me go to 2 hour. Let me just see if I can add more flesh to the analysis. Let's see if we can add more flesh to the analysis. What's the level there? Right. So looking at the 2 hour, let me see if I can mark my last main range. It was this one, to the right there. Let me put this. Right. So it's like this. So most likely, potentially, we are looking at if ever it can retrace, it can just touch there. If ever it can retrace, it can just touch there, then keep on going down. So here it will be a very good thing for this candle, the current candle, to close below this level. Once it closes below that level, that's a good, it's a good confirmation, to be a good confirmation. Because if it doesn't now, if it doesn't, we now need to wait for the lower time frames also to give you more, just more extra information, or more extra confirmation, whatever, on what will be happening. So here, let me just mark also my range on the 1 hour is literally here. So yeah, once we close below there, it's actually a very good sign. So having done that, we now need to look at let's look for a pair that is directly related to the dollar, like USD JPY. right? Looking at USD JPY weekly. Let me go to the monthly actually, because on the weekly most of the levels have been reached. Right. On the monthly, if you look left here, we tapped a certain major resistance there, and that resistance was last touched in 1990. Imagine touching a resistance that was only touched, and after 1990, it came, it didn't touch it. So it's just another extra sign or an extra confirmation that might give you a hint of most likely what will happen on that level, because a 1990 resistance is more older and more stronger than a current 1 month old resistance. So yeah, if you're going to, that was a break of structure. Let me see anything else that we can add to this analysis. Let's go to the weekly. Right, on the weekly. So these are our legs. That's a major leg there. That's a major leg there. That can also be a leg, and that can also be a leg. And also here, we have a slight demand that is there. Here, we also have another one. Right. So these two demands are very fundamental demands that, especially this one, that can just be tapped if ever it wants to keep going up, right? They can still tap there before the overall. Let me go back to the weekly. Personally, what I do whenever I analyze, I pay attention to every single detail that that price will give me. So here, if you look at this candle here, this candle, its low was taken out by this one. So now, if ever we're in a situation like that, it's like this situation where this law was taken out obviously by that. Um, in as much as we didn't fully come all the way there. Same thing here. We took out the law. Obviously, it now depends with the range that you'll be looking at. But when they do something like that, a potential pullback will be actually imminent. So you just need to add further flesh now to the analysis. Just need to add further flesh to the analysis, right? So looking at the daily now, looking at the daily time frame, if I could to mark some legs there, that's a leg, that's a leg. Our next leg is literally this one. This one is not fully confirmed as a leg due to the fact that we haven't fully uh, broken above there. So if we haven't broken above there, they are still considering that as the leg. So even if they do something like this, that will still be a bullish market, right? So it's just something that you must know, right? So looking at inside structure here, they've done a shift to the downside. They did it here, they also did it here. So already here, we can say we have a leg now here, where it is now. So it being a leg now, this is actual information now that can also help you understand our overall, what will most likely happen even during your CPI. So now knowing that that's now a level like that, all you just need to do is to mark the level like this. Mark the level like that. Eight-hour. It's actually on the extremities of the level. That's the thing now. It's actually on the extremities of the level. Right. So here I am on the 8-hour. Right here, we also did shift. We went up, we shifted, blah, blah. So now here, the most important details are these ones, whereby there, when we took out that law, like here, I can see that there's a law that has been, that was taken out. That law being taken out is very fundamental information now that can literally help us to understand what might happen. This law, if you look at all these laws, this law, obviously, this was the whole candle guiding that. This law, this law, this law, this law, this law, this was the only law that was taken out. So that law being taken out now, already it makes this whole level here a very, 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 very important zone for the drop. So going to the 4 hour, we just need right on the 4 hour. I believe it's much, 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 much clearer, much clearer. So here we broke. After we broke there, we went up, came down. We didn't break here. We broke there. After we broke there, we came down. Let me put the levels nicely. We broke here like this. Then they came down. They didn't take out this level, right? Then they went up. As they went up, they broke this previous one. Or I can just say this one like this. And go to the 2 hour. Right. So on the 2 hour, after we broke there, we came down. We also did break, kind of broke here. Right. You can still see that looking at this simple structure that is there, they still look like they're still, that's a leg like that. Right. So the most important information is the information that is going, or the action that is going to happen, especially right here where the market is. What is going to happen there in the next 1 hour is information that is also crucial to the decision. It's just remember, it's just a thing of confluencing what we have seen on the DXY with what is going on here. So I like where it is because it's actually an extreme zone. If ever it wasn't on an extreme zone, it was going to be a different case scenario. So it being on an extreme zone is a very beautiful thing because this 1 hour candle is going to close in 30 minutes. If it closes below that leg there, let me go to 30 minutes or 45 minutes. I believe 45 minutes is actually closing anytime soon. Anytime soon, anytime soon. 45 minutes. Right, 45 minutes. Right. So all our laws here were being maintained. So 45 minutes, if we close below this, definitely this thing will sell. If you close below this, that thing will definitely sell. We'll be looking maybe for that level as the first TP. Then the next TP, you can just look at it from around this demand, just in case it decides to respect this and keep buying before the overall shift. So all of those details are details that you'll be looking at before you just jump into positions. So sometimes it's even wiser to even have sell stops even just below the level there like that. And then you put your stop loss slightly above. Obviously, when it comes to news, you can even have an invisible stop loss. An invisible stop loss because you are mostly active or when the news event is happening. So it's not necessary to, it might not be that necessary to have. You can put it, yes, but it won't be necessarily necessary to have a stop loss if you're going to be more active, like during the entire time. US 30, our current selling range, we have this as our range. Uh, we still have this leg as a target down. And here we have this range. Go to the daily. On the daily, also, they've done something now that is something that is also alarming now. On the daily, they've done a shift to the upside. Here, if ever they literally took out this and never took out this high, they had the potential to sell. If ever they only took out this pause, if they took out this and just came there, they failed. It was just going to be a continuation of sales, right? It's the same situation with here. If they took out this and they come here, they failed. It was just a continuation like that, or something like this also, but they took out this, They come here, they fail, they continue. But now, if they do something like here, what they've done, whereby they took out this, but they've actually come now and took out also the previous. There now, that's information that is very, very key now. Here, all you just need to do now is to mark your previous or your current. If you look at these candles that are here, if you look at these candles that are here, all I need to do here is to mark my lowest point here is my first lowest point is this one. And they've all been bouncing above. Cam, bounce, cam, bounce, bounce, bounce. That bouncing, 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 bouncing. They are bouncing there because if they're going to what they've done there, that shift that they've done, which is called closing above this level, they now have to maintain that bullish, 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 bullish up until they get to that level before they drop, right? So that's also something that is that I've pinpointed on US 30. So now once you've seen that, if I go to the 8 hour, still bullish, very bullish. That's a low, that's a high. Here we are just playing within the range. We're just playing within the range. Here we took out this high. After I took out this high, we made a new high and a new low. If you mark this range here, this is a bullish range, minor bullish range, obviously, but the major bullish range, we're looking obviously at those levels there, up there. And even this one is a minor level there. So this is a bullish range. It being a bullish range, I also like the fact that if you look inside there, they've also shifted structure there. Here, this can also be looked at, can also be seen as a what do you call this? As a fake out. Not only a fake out, but also even if you follow structure, you realize that here they didn't take it out. If you follow structure here, that was a high, that was a low. Then they broke. After they broke, they created this new level here. I can say that. Then they pulled back. All of this is still a pullback. They didn't close below here. So they are still bullish. Them still being bullish. I like the fact that they've shifted bullish right here. Right here. So US 30 is currently bullish. Bullish, bullish, bullish. It's actually bullish. So NFP CPI, I'm looking at something like this on US 30. That's my projection. And yeah, most of the confirmations that I want to see they have happened. It's not like I'm waiting for. If ever, let's say it had not yet taken out this, I was going to say, I'm still waiting for that to happen. But now it has happened now. That's the thing. It has happened. It has happened, and we are now just waiting to see the action. Here, this was just liquidity. That was a law. All of this was within this candle here. That was just liquidity there. Let's go down to the lower time frame than the 4 hour. Let's see if there's extra information that we might need as well. Um, right, so this is the 4 hour. Right. So if you look at this structure here, that's a high and this is a low. All of these candles are still within this high and this low. So we're just looking at this as the break that was done. So if ever we had an ability to delete all these candles, I would have deleted them and shown you that this was just a break of this candle low by this one. So after it was broken like that, then they now broke this one, that broke that one to the upside. They on the 4 hour, they on the 2 hour, they literally broke it around here. So even if you're going to extend like that, it's still the same idea there. Still almost the same idea. Right. So that's our current projections. Those are my current projections there lately. The most important thing, once you have an understanding of the DXY, so whatever pair that you might even choose to really focus on, you just focus on it on the basis of what we have spoken about. Just focus on it on the basis of what we have spoken about. Here, let me just mark a certain last range here. They broke out of it. They're just playing above it there. Let me see if there's anything else, anything else that is of importance. Any other pair that is right. Also GU also did something also. GU now it has given us this slide because if you look at structure here on GU, that's a break. That's a break right here. There was no break, right? They not being a break. They still have this change of character to fulfill, obviously. So either they will buy into this level, then drop from there, or they can even wipe everything up, then start to drop after. So they can still take out everything up here, then drop all the way now, like this. But here, the bullish signs, they've already happened. If you go to the daily, they've actually done bullish signs. And what I like is if you look to the left side information. So on the daily, this is all a selling range, this low and this high. It's all a selling range. So even if they come here, if they come here and reject from this, it's okay, you sell from there. But if they break everything also up there, it's not a problem because here they haven't fully changed character downwardly. It's different from Euro USD, which has literally changed character to the downside. That one, it has a limited range in the aspect. So here, one sign that I saw that we are bullish is here when we took out that level there. Yesterday, we did try to take some sales due to the fact that I still had this range here, of which it wasn't really a high probability sell in the sense that overall structure is still bullish, right? And also this was just a minor level. So it was here, I think it was around here, below this level, because so long we're still below this level, there was still potential for them. So my idea was once we come here, we reject here, then we change character, then we'll look forward to the next. So that was the idea. But then they've done obviously give us bullish structure. So yeah, that was my last range of which they've broken above. So I'm also bullish on GBP/USD. Bullish there, bullish also on US 30. All you just need to do is to pick a pair with the highest range. This one can just, if ever it wants to reject there, it can just boom, then boom, reject, then drop if it wants to drop from there. But if it wants to also take everything out alongside with this liquidity, it can also do it. So it's also, but that's my entire basis. That's my entire idea. If you look at this 4 hour candle here, that's also my range, which is a buying range there. So yeah, if I'm going to, even if you're going to put a stop loss, you just put a stop loss below this level here. If you're going to put any stop loss, it's also good to put stop losses, even if it's fundamental news. You can even put your stop loss just slightly below this yellow zone. Then you buy above there. So guys, that's my idea for CPI. If you want to trade any different pair, you just trade it alongside this idea that I'm presenting to you. So guys, we're done. We're done. We're done. We're done. We're done. Make sure you trade safe, trade with logic. Don't just be a financially illiterate person on the charts. So that is it. We are done.